Okay, class, today we're going to talk about shipping terms. We've got FOB Destination, FOB Shipping Point. These are terms of who is responsible for the freight. Is the seller responsible for paying for the freight, or is the buyer responsible for paying for the freight? Now, depending on who's responsible depends on how we actually record this. If the buyer is responsible for the freight, such as in FOB Shipping Point, you will see that the buyer actually has a journal entry to do that's a debit to merchandise inventory and a credit to cash. However, on FOB Destination, you see that the seller will actually do a journal entry that is a debit to delivery expense and a credit to cash. Now, you may ask, why would we be debiting and crediting something other than delivery expense? Well, there's a quick and simple, easy explanation for this. And the explanation is that when a buyer is paying for the freight, the buyer wants to include that amount in the merchandise inventory. And what you want to do is make sure that you're capturing all costs that are associated with that merchandise so you can set a good selling price later on down the road. So this is on page 270, this particular picture that you're looking at. And what I want you to do is I want you to turn to that particular page in your book so you can really see the journal entries as I go through and I simulate these journal entries, and I also explain why the importance is of having this particular item captured within the merchandise inventory versus just recording it as an expense is when the seller is responsible for it. So, again, if you will turn to your book on page 270, and I'm going to get myself adjusted here. Here we go. We're going to see that with FOB Shipping, the buyer is responsible for the freight. And so when the buyer receives the freight, they're going to have a cost associated with it. And let's say that cost is $150. Well, what the buyer is going to do is the buyer wants to record a journal entry, a debit to merchandise inventory. Again, I'm going to abbreviate just for time's sake here. Merchandise inventory for $150. There's your debit. And then we're going to credit cash for $150 as well. Now, this allows me to increase my merchandise inventory account and go ahead and pay for this particular item. This is if the buyer is responsible for the freight. Now, if the seller is responsible, we will consider this to be FOB, Freight on Board Destination. And in this particular case, the seller is responsible, and the seller will now record a debit to delivery expense for $150. And a credit to cash for $150 as well. Now, here's that question again. Why would the buyer record it to merchandise inventory and the seller record it to delivery expense? Well, again, the easy explanation is that the seller wants to record this as an expense because that's an expense associated with selling this particular item. However, the buyer wants to include all costs associated in merchandise inventory, so when we're ready to sell the item, we can actually set a very good sales price. And I want to kind of give you a brief example here. Keep in mind, I'm not an artist, I'm simply just an accountant, so I'm going to give you a brief demonstration here with a t-shirt. Let's say that I buy a t-shirt, and let's say I buy 200 of these t-shirts, okay? So I'm going to buy a quantity of 200, and each cost me $1 each, okay? So this is a total cost of $200, all right? And my delivery, or my freight on board, actually cost me $50. Now, I have already sunk into these 200 t-shirts. I have $200 and $50 for a total cost of $250 for all of these t-shirts. And I actually bought 200 of them. So what I need to do to be a smart business owner is I need to actually calculate what is the actual cost of each individual t-shirt that I have now purchased. And any good business owner knows that a calculator is your best friend, so you're going to take 250 and divide it by 200, and we're now going to see that each t-shirt now costs me $1.25. So the cost of each t-shirt is now $1.25, and when I go to mark this up, I want to make sure that I'm actually recuperating this particular cost, as well as I want to make sure I can buy another one and cover all of my overhead as well. Sometimes in merchandising, it's very hard to capture this, and you're going to find in a lot of companies that market percentage is extremely high. Well, let's just say that we're a very modest little t-shirt company, and we're really not out to hurt our customers, so we're just going to do an average price of $10 for sales. So let's simulate what happens when we include freight on board within our total cost and when we don't include it in the cost. Right now I have a total cost of $1.25, and my sales amount is $10. So for every t-shirt I sell, I'm going to earn $10, and my cost behind it is $1.25. So let's look at my gross profit. Well, if my sales are $10 and my cost of merchandise sold is $1.25, that now leaves me with a gross profit of $8.75. This is my gross profit. I now have $8.75 to cover overhead, purchase more items, etc., etc. However, let's look at the same demonstration without including the FOB shipping point, or with the freight on board charges, as I should say. Okay, same t-shirt. We're buying here. Again, I'm not an artist. We leave those up to the professionals. And in this particular case, I'm still going to buy the quantity of 200. They cost me $1 each. And so now my total cost here is $200. And I'm going to opt not to include my FOB in this particular scenario. So now I'm going to set a sales price of $10 again. And at this point, I now have sales of $10. And I have cost of merchandise sold now of $1, leaving me with a gross profit of $9. Okay? And if you look at this side by side, you get $9 for this one and $8.75 for this particular example. You would think, well, we actually come out better with the $9. And in all actuality, you don't come out better. What's happening here is this $9 now needs to cover the cost of the shipping. So what you've done is you've created a gross profit that is higher. However, you have an expense down here associated with sales that has to be deducted, which is now actually going to lower your net income. Whereas when you do the appropriate method of including FOB into your total cost, you don't have to worry about paying for this later on. It's already built into it. So remember, a rule of thumb, include all costs associated with your items so you can capture the total cost of the item, and make sure that you set a good sales price so you can get a good gross profit to cover your overhead and have a decent net income at the end of the day.